Today, Bitcoin rises to the $92,000 level to kick off the week. In a letter obtained exclusively by CNBC, Senator Elizabeth Warren warns SEC Chair Paul Atkins of risks tied to crypto in retirement accounts, and Wu of Ava Labs explains what he would like to see from lawmakers this week as they work on crypto market structure legislation. Welcome to CNBC's Crypto World. I'm Jordan Smith. Major cryptocurrencies in the green as we start the week, as both crypto and stocks seemingly shrug off news that the DOJ opened a criminal investigation into Fed Chair Jay Powell. As of noon Eastern, Bitcoin rose more than 1% to $92,000, Ether was pretty much unchanged, and Solana's Sol token climbed more than 2%. All right, let's talk about the top stories. Crypto custody firm BitGo wants to raise more than $200 million in its U.S. IPO. The company announced today that it plans to sell 11 million Class A shares at $15 to $17 each, plus a little over 821,000 shares offered to existing shareholders. BitGo intends to trade on the New York Stock Exchange under the ticker BTGO. This is just the latest crypto firm headed to U.S. public markets. Last year, we saw a slew of crypto-focused companies debut here in the States, including stablecoin issuer Circle, Bitcoin miner American Bitcoin, and crypto exchange Gemini. Next, lawmakers are revisiting their crypto market structure efforts this week. Two Senate committees, Agriculture and Banking, are slated to hold hearings this Thursday. This would bring the country one step closer to establishing clearer guardrails for digital assets. Senate Banking Committee Chair Tim Scott argued the legislation would ensure the next generation of jobs and that innovation is built here in the U.S. He added that it would also make it harder for criminals to undermine the U.S. financial system. Sources close to the Hill told CNBC that three key issues are being prioritized this week, including stablecoin-linked rewards, the treatment of DeFi platforms, and the ability for elected officials to profit from crypto ventures. And finally, in a letter obtained exclusively by CNBC, Senator Elizabeth Warren warned SEC Chair Paul Atkins of risks tied to President Trump's executive order that cleared the path for crypto to be included in retirement accounts. Now, in the letter, the Democrat from Massachusetts requested information regarding the order, which she claims, quote, endangers investors by clearing the way for pension funds and retirement accounts to hold volatile crypto assets. The ranking member of the Senate Banking Committee went on to write that, quote, President Trump's executive order comes amid a recent trillion-dollar nosedive in the cryptocurrency market, underscoring concerns about the sector's volatility, weak investor protections, and lack of transparency, and the president's financial conflicts of interest. She noted that the president's order comes as Congress considers crypto market structure legislation that she argued, quote, could create a tokenization loophole through which nearly any financial product offered on the blockchain could sidestep the SEC's authority to regulate securities, risking Americans' retirement savings and investments. Back in August, the president signed the executive order laying the groundwork to add alternative assets into 401ks. This marked a major victory for the industry, which has pushed for greater adoption of private assets in defined contribution plans under Trump's second term in office. We reached out to the SEC, and a spokesperson declined to comment. Of course, Chair Atkins is publicly pro-crypto. For example, in April, he said that innovation in the crypto industry has been, quote, stifled for the past few years, arguing that changes were needed. All right, for our main story, in light of all the developments for crypto expected on Capitol Hill this week, I spoke with Wu, president of Ava Labs, about what he's hoping to see for crypto market structure talks. He also weighs in on what to expect for crypto markets in the new year. All right, John, we're starting this week with crypto broadly on the rise, and that's despite the news that we got yesterday from Fed Chair Jerome Powell that he's facing an investigation from the DOJ, and that did cause concern for many on Wall Street, and we saw Treasury yields rise, but we don't see much of that on the crypto front. Why is that? What's your reaction to the way prices are moving today and what seems to be little effect on the Fed front?
Well, it's funny because for a while now, last couple of months at least, crypto, the asset class, has been moving to its own tune. You know, Bitcoin being a digital store of value hasn't reacted like you would think as a store of value following gold. And some of these asset classes have tremendously underperformed. Now, with that said, I'm extremely positive in the medium to long run. But I think short term, I think the asset class needs to absorb a few things, really. That's the issue. You know, some of those things are, frankly, there's been a deleveraging event as of October 10th. And some of those funds who are traditionally in the market are sitting on the sideline. Those same funds, by the way, who help create a lot of these DATs have contributed in kind to the DATs, and their capital is actually trapped and unable to be deployed because they're waiting for the DATs to have SEC approval. And frankly, the incremental investor in the space has so many choices today. You have things like traditional IPOs like Circle. BitGo, a qualified custodian, is now filed and it's going to be going out there soon. You have the old Coinbase, you have Figure. So they have many ways to access the asset class, and among that ETFs and DATs. So there's just so many choices. With that said, I think the long term and the medium term is fantastic. We're going to see the RIA channel open up. So there's $40 trillion of access to the space possibly. Clarity Act going on soon, or the market structure bill. That's going to create even more adoption. So I think the takeaway is the asset class has its own idiosyncratic issues right now. With that said, the adoption, ironically, is happening all over the place.
Yeah, let's talk a little bit about that, because I think you hit two things there. One, just how much the investment case for crypto is changing, or sort of the way that it behaves as an investment, and also the adoption. And, crypto for a long time has really been global. The US has not been a player at all. And then last year, the US became the big focus, right? You had regulation, you had all these IPOs. And I guess as we head into 2026, do we continue to stay focused on what's happening here in the US, or do we look abroad still, or go back to this idea of looking abroad and maybe don't focus so much on the US?
Well, I think you have to look at it on a global basis, and you look at it on a macro level. You look at global M2, but the U.S. is a big part of that global M2, so you can disconnect those two, if you will. You definitely want to look at it on a global basis, with the U.S. being the largest participant. And I think there's a couple of things happening in the U.S. We are going into probably more easing environment, better liquidity situation. We'll ultimately have a good macro backdrop, and also more adoption. We've already seen it even before market structure bill. And with the market structure bill, you'll have even more adoption and use cases.
To that end, we have word that senators are meeting this week to mark up a crypto market structure bill after it got delayed last year. What are you watching for in that markup? And are you optimistic about progress, given that we have seen a sort of tug of war between banks and crypto over rewards?
Yeah. So a couple of things I'm looking specifically. One, I want to make sure on a macro level that there's still this urgency, and it seems like there is. And there's also bipartisan support, and there seems like there is. So that's all fantastic. Now, specific issues that are on this, I want to make sure. I think the latest proposals for stablecoin yield, and it's a compromise basically where exchanges can allow to provide transaction rewards, is actually a very positive step. At the same time, it doesn't change the world so drastically that the way the banks provide interest on idle capital is challenged too much. So I think that's a very positive move. I also think clarity between the SEC and CFTC working together, that's been a mandate for rulemaking for those two, will also make it easier for people to understand which rules they're playing under. So then real creative people will no longer have to spend half their time figuring out which rule set they're applying themselves to, and just worry on what they're developing.
Can I ask you about this argument from the banks that potentially offering rewards from a crypto front could deter people or convince them to move away from, FDIC-backed bank deposits? Is that a concern that the industry should take seriously? What do you see in that argument there?
I think that's a legitimate, complaint from the banks. With that said, I think they're probably overstating it just to protect their current position. And, I think anyone, whether it's crypto or traditional finance related, you want the same rules for both sides. You don't want different rules for different people. If the banks have a certain set of rules, including what's considered capital, what's not considered capital, Basel III, this, that, OCC rules, and they're handicapped from doing certain things, then those handicaps, unfortunately, should be applied to the crypto native crowd as well. It shouldn't be two rules for two separate people. I think what's important there, however, is that you have to have certain regulations to protect the consumer. And in having the way that's written up right now, as I see it, where rewards are based on non-idle transaction oriented, that is no different from a company incentivizing new users by giving them back something because they are transacting. So it's turning it, I think, into a fairer shift in dynamics.
Also on the regulatory front, 2025 is sort of an interim period for both the SEC and the CFTC. You were waiting for both their heads to get confirmed. Obviously, Paul Atkins got confirmed earlier in 2025, and we just got Michael Selig sworn in as CFTC chair at the end of 2025. So what should we expect from those agencies this year as we're moving past that interim period? Or do you expect more active rulemaking from those agencies?
I've had interactions with Paul. I haven't had interactions with Michael. But reading up on both of them, I think they're both very pro clarity, put it that way. So Paul Atkins is really focused on providing the retail access to certain securities and in a normal way, a healthy way. So I think they're going to both work together to give the consumer access to these assets in a consumer protected way.
All right, that's all for Crypto World today. We're back again tomorrow, and we'll see you then.